Welcome back, folks. This is the ICT Mentorship commentary for Tuesday, August 10th, 2021. It's going to be real short and sweet, just a recap of Eurodollar. As you know, we've been looking for lower prices on this pair. Near-term draw on liquidity has been tagged so far on the week. Next one is here, and then we're going to try to see if it can gravitate towards this one over here to get in sync with what has happened in cable. So Monday and Tuesday's trading, we can see we've had downside delivery offered. Eurodollar hourly chart, you can see kind of small range in here, but we'll take a look at it throughout all the time frames to kind of flesh it out. And the 15-minute time frame. Now this is where you want to pause the video and set your chart up to pull out anything that shouldn't agree with what I'm going to show you. All right, I'm going to show you my annotations now. All right, so we have small little sell-side bounce, buy-side inefficiency up here. Institutional order flow entry drill at this candle's high. We trade up into it in London there, and in the bearish order block as well. These last three up close candles. Again, not concerned with this candle here, even though it has the higher high, because of the body. That disqualifies that candle. This is the order block on the 15-minute time frame. These three consecutive candles. The reason why is because this is the beefier bodied candle, and it's consecutive with the previous two. So extending out in time, you can see how we traded from the midnight up into here. Notice the early run up ahead of London. So before 2 o'clock, it ran up, started to break down, then one more time passed up above institutional order flow entry drill into the order block and above the opening price at midnight, which would be this candle's opening right there. So there's your Judas swing. All right, and you can see that high formed in London, the low, and retracement back in London kill zone right there. And displacement to the downside, setting up another run that we'll look at when we drop into the 5-minute chart for New York. Dropping down into the 5-minute chart here. Again, this is that high of the day, the short-term low, and the retracement for optimal trade entry on the London session. So right here. And last two up close candles. See how we refined that? Remember, I was looking at the 15-minute time frame and I was showing you the distinctions between why I wanted to refer to the 15-minute bearish order block at this level, but dropping down and refining it to a 5-minute chart, this becomes the order block here. And we can see it extended out to here, and just a beautiful return back in for London, and trades lower. Breaker in here, high, short-term low, high, down close candle, low, hits it, sells off. And then we got this run here. Now this is where time of day takes precedence. So 7 o'clock in the morning, New York open kill zone, right there. Notice this short-term high banging into that order block is just ahead of that 7 a.m. time window. The market drops down, creating a small little fair value gap there. Rallies back up in, fills the gap, and also trades into optimal trade entry. Now, optimal trade entry, high, low, here, and then it breaks down. We have a short-term low taken here, trades below that. Rallies back up in optimal trade entry, New York open, kill zone again, high, low, high, sells off, 3 consecutive up close candles, low to open, extended out in time, hammers it one more time, then trades lower, and creating the low of the day exactly at inside the London close time frame. Now, between 10 o'clock and noon, this is your London close Now, it can extend into 1 o'clock, as mentioned in previous discussions about it, but creating the low of the day, outside end of the range, high of the day in London. We've been looking for the bias on this pair. Lower. And if you were just simply looking for optimal trade entries, YouTube level, you can get one here, you can get one here, here, and here. And then taking profits as we enter the 10 o'clock to noon time window. Just a beautiful display of power 3, and then comes off of that and consolidates into noon time New York. And we're consolidating, obviously, going forward. So looking at this, you had two opportunities. You had the London Open Kill Zone, where you could have taken a short up here, aggressive on the high of the day, or wait for a break in market structure. You can have one here. Breaks below that, comes back up in, bearish order block on the 5-minute chart, optimal trade entry as well. You can be short there using the stop at this high. So between that price and that price here, essentially about 5 or 6 pips or so. So obviously that's really small, but just to be safe, you can use a 10 pip stop loss. Try not to overthink it. You're not trying to be you're not trying to use an ultra short stop loss. You're not trying to be Mr. Perfect or Mrs. Perfect. You want to be able to put the trade on and not worry about getting stopped out. And ultra short stops are just asking to get banged. So shorting here, just to this low here, that is 2, 4, 6, 8, 10. If you get below it, 11 or 12 pips. So 1 for 1 there. That's a nice bread and butter trade. And then here's one as well here. So going short here, using a stop there. So about the same, just use a simple 10 pip stop loss. From here down to here is 1 for 1. Okay, and obviously reaching below short-term lows, covering below that, short-term low, covering below that, holding on to time of day. Every time a short-term low is taken out, you take a partial off there. Short-term low is taken out here, take a partial there. And it gives you one more here that doesn't quite take out that low. And if you had anything on the balance, start to trade higher. If it goes above the rejection block in here, that could be a cause for you to completely collapse the trade and not allow it to get stopped out back here and just preserve some of the existing partial profits. So study this one. Have this also put in your study journal and fill in any other additional things you may see here. I just pulled out the most salient things. I'll touch base with you tomorrow in a midweek review. Until then, be safe.